China's stock market is big, not as big as London, but the Shanghai and Shenzhen together are nearly as big. And they fell sharply, but they're down something like 20% in a year, and that's a crisis or crash. But the more concern is really to do with the real economy, the industries, and they are slowing, exports are slowing, and that really should be of more concern to us, I think. It is important for our companies, particularly if they want to increase sales by exporting to China, if China is going to slow. I mean, there are benefits to this as well. We've seen falling fuel prices, we've seen falling commodity prices will impact on a whole range of goods, and industries and factories in Europe and the UK will benefit from lower input costs from lower energy and lower commodities in the manufacturing process. This stock market in China is problematic, it's big, but it's isolated from what it really says about the real economy in China and for the rest of us. There aren't that many foreign investors in the stock market. In fact, large parts of the stock market were barred to foreigners until recently. So there isn't that much Western money, pension money in the market, although there is some now, more so than in the past. It really is Chinese money, and it's a Chinese problem. Unlike what we saw with our own financial crisis back in 2007 with subprime in the States, and we saw how quickly it spread to the American financial markets, Wall Street, Lehman Brothers crash, and the investment banks toppling over in the States. We thought we were insulated, but we weren't. Then it came over to the UK. We saw our own stock markets implode, and our own banks started to wobble. That's not going to happen because the linkages and the connections and the crossover investment simply doesn't exist in the same way with the Chinese stock market. Yeah, I think it's an important drama to be aware of, but I think the perspective is also important to get that right. You know, who exports to China? And where does China figure on our export map, you know, export rankings? And from what I recall, take Australia, a third of its exports go to China. So it's very important what happens to China, to Australia, and also New Zealand. The first European country that comes into that is Germany, and it's only 5%. So 5% of Germany's exports go to China. And where are we? We're sort of down, no, it's about 2-3% of our exports go to China. It's even less than Germany's 5%. So that's where we are in the export map and how important China is as an export destination. It is important. Its importance really because it was growing rather than its absolute total size. But that growing now is slowing sharply. And that would concern, you know, obviously German exporters. It's not markets that are collapsing. I mean, don't get me wrong. I mean, China will still be the biggest market for cars, flat screens, mobile phones, red wine, dairy products, you name it. And the list will get big, longer and longer. It's just these markets aren't going to grow as fast.